Good afternoon, everyone, investors and media. I'm Richard Zhang, the spokesperson of CDF. Welcome all of you to join the first quarter 2022 investor conference of CDF. First, we will invite Steve to introduce the overview of the first quarter performance and share the progress of ABCDE strategies. Next, Jenny, our CFO, will introduce our financial performances, and Mandy will talk about the financial performances of the subsidiaries. China Life's report will also cover the EV of the company in 2022. And the CEO of China Life and the actuary department heads will also here to answer your questions. And this time, the QA session will open to all of you to raise questions via WebEx. And there are two sessions in the QA. And in the first part, the corporate investors and professional investors will ask the questions, and in the second part, we'll welcome the press to ask the questions. Now we will invite Steve to explain the performance of our company in the first quarter.
Thank you very much for joining us today. I'd like to begin by giving you a very brief highlight of our first quarter performance. To begin with, first quarter net income was 9.7 billion, which ranked us number 4 among the financial holding companies in Taiwan. We also continued to implement our ABCD strategy and made a lot of good progress, particularly on the digital area regarding ecosystems. We also made more progress during the first quarter on our Net Promoter Score in terms of developing more data, in terms of getting information now from multiple channels as opposed to only one channel. And we'll update you more on our progress on that in the future. China Life had a very strong first quarter as well, 8.8 billion in profits. And importantly, they continued to improve their VNB margin. It increased to 36.1%, up from 23.2% a year ago. So year on year, a very big improvement. Also, you'll be updated a bit later from the team regarding the embedded value going up 12.6% to over 400 billion NT. In terms of KGI Bank, continued strong performance with net income up 25% year on year. They also continued to maintain a superior net interest margin of 1.39. We continue to see strong growth in lending, particularly in SME and personal loans, up 18%. And asset quality remained very strong with an NPL ratio of 0.14. CDIB Capital had a more challenging quarter, particularly due to mark-to-market as a result of market fluctuations. But they also upstreamed, or they plan to upstream during the second quarter, 8 billion NT, some of it attributed to the sale of the building last year. They also received new fund commitments of 1.4 billion. KGI Security recorded net income of 1.4 billion, and ROE was at 8%, outperforming the industry, but also a more challenging environment in financial performance due to the state of the markets. They maintain their leading ECM and DCM position. Broker and warrant market share also improved year on year. And also we managed to increase our customer AUM by 11% year on year and launched a new mobility fund, which is based on EV technology. In terms of our strategy today, I'm only going to touch on a few comments. As I mentioned earlier, we continue to do a lot of work on the digital front, particularly to improve the customer experience and also to build the partnerships and alliances. On the becoming employer of choice, we just completed our strategic talent review, which will enable us to better identify and position our talent for future growth and opportunities in our business. In terms of customer focus, as I mentioned briefly, NPS continues to be a key driver of how we improve customer experience. We're beginning to gather a lot of data that will enable us to improve our performance and the customer experience across all our channels. In terms of driving growth, you continue to see a strong improvement in ROE and margins across the board. And also when it comes to cross-selling and data analytics, we're beginning to use better tools. Recently, we launched the first machine learning model for risk at the bank, which we believe is one of the first, if not the first, in Taiwan. And on execution excellence, continued work, particularly around optimizing our investment and risk appetite given the more challenging environment. And we continue to make strong progress on our ESG agenda. You can quickly turn to the next page. What we've done is just given you a brief update by subsidiary. Again, I do not plan on covering these in detail. I'll only just touch on a few. First of all, I want to remind everyone the very strong position that we have in China Life. We continue to have the lowest cost of liabilities and continue driving the VNB growth, which you can see as reflected in the improvement on our EV value up 12%. The book remains very prudently managed with our duration averaging between 15 and 16 years. You can see continued progress on the digital front, particularly with the launch of the new iLife app. Every subsidiary now is working on implementing our new HR system Workday, which is a world-class platform, as well as implemented LinkedIn learning across the board. There's been strong progress made in terms of NPS, and more recently also expanding microinsurance services to underprivileged people. A lot of good work continues on driving growth, but again, given the more challenging environment, it's about continuing to perform in a difficult environment. And on expanding distribution, we continue to work with our channels to improve the mix so that we keep driving our VNB margin. In terms of the bank, just to remind you, key focus for the bank remains to continue to improve margins. They continue to improve CASA and the fee income mix. And also, as you can see, for example, in the first letter, we launched with our 12th ecosystem partner. And we'll be rolling out e-account signature opening in April. We continue to look for ways to accelerate the deployment of our new mobile applications, and we're currently piloting a new design which we expect to launch during the first half of the year. There's a lot of good work that continues on the data analytics side, and we've seen very good progress in China despite the tough environment of our consumer finance JV, reporting a profit during the first quarter, even though it's only 12 months old. And you can see also, in terms of continued progress on the ESG agenda, as well as continuing to fine-tune our models to further improve analytics. If you move to the following page, CDIB Capital, despite the tough environment, they completed 2 transactions for $1.5 billion. We continue to streamline our processes. A big upstream of dividends this quarter, which will really help the overall financial results in terms of cash flow. And we continue to work on automating further workflows across the company. KGI Securities continues to focus on shifting to more of a wealth management model, and they began to make very solid progress on our digital agenda. And we continue to work on a better platform for Asia so that we can expand our wealth management services. Some more work has begun to happen around RPA and process engineering. We've also renovated our branch. We're trying to improve the image and the quality of the customer experience when they come to see us. Good progress in terms of branding and also in green financing. I'll now turn it over to Jenny to make some comments on the financials.
I'll talk about the financial performances. Please go to page 13. The first quarter net income is 96 billion. The contribution from China Life is 8 billion, which is much higher than the same period last year. Starting from this year, CDF will recognize 100% of the revenue of China Life, and on the same period last year, we only recognized 35% and 56%. KGIB contributed 1.3 billion, and which is a 26% growth compared year-on-year. Under a challenging environment, the performance is solid. The loss of CDIB of 570 million is due to the unrealized credit loss. Mainly due to the market volatility of the investment. The brokerage income from KGIS contributed the fee income, and the lending income provided support to the holding company. Overall speaking, the first quarter's performance is still solid. Please go to next page. The total asset is 3.5 trillion, and which is a 2% year-on-year growth. And discount and receivables and loan also both grow. The relevant deposit figure recovered to the level at the end of last year. As for the provisions, growth 5.5%. That is the liability provision of China Life. Please go to page 15. CDF's total assets in the previous 5 years increased 10% year-on-year. The leverage ratio reached 13.3%, and the first quarter ROAE is similar with last year. Please go to page 16. In the subsidiaries, the car all meeting the regulatory requirement and or even exceeding the requirement. The leverage ratio is the same as last year, which is 122. That's my report about financial figures. Next, Mandy will share the performance of each subsidiaries. First is China Life. And China Life continues to emphasize on excellent asset management in achieving stable profit. And the profit for the first quarter was 8.8 billion. This includes the ECL of 1.5 billion of the Russian bonds in February. In its net worth at the end of March was 147 billion, a decrease of 30 billion compared with the end of last year, mainly due to the fall in bond valuation during the rate hikes. The ROAE is 21.8%, EPS is 1.8 US dollar. The performance in the first quarter was impacted by the market changes, including the rate hikes expectation and market volatility. The FYP as a result fell compared with the same period last year. In terms of product strategies, China Life still focus on the high value policies and continue to optimize the product mix. The sales of regular pay products increased by 30% in the first quarter, which accounted for 31% of the FYP, an increase compared with the same period last year. In addition, China Life has increased the sales of ILPs to meet the needs of the market and the customers, and ILP accounted for 34% of the FYP. In terms of distribution channels, China Life maintains a balanced development across all channels, while increases FYP contribution from its own distribution channels. In the first quarter, agency accounted for 18% of the FYP and focusing on the high margin products. Among them, the premium from the 6-pay product increased by 40% compared to the same period last year. In terms of FYPE, China Life continues to strengthen its overall product mix and offer high value long-term regular pay products. The FYP increased by 28% year-on-year. Though through continuous product optimization, VNB increased by 5.5% compared to the same period last year. The VNB margin reached 36% of the total product in the first quarter. For the asset quality, China Life has increased the positive spread, and COL remained the same as the end of 2021 at 2.98%. And the persistent rate at 30 months and 25 months remained stable. China Life valued asset and liability management while focusing on the long-term stable profit, with fixed income as the main component. And China Life takes advantage of the investment opportunities from rate hikes and continue to invest in the foreign bonds with better yields. For the domestic investment, due to the 2 commercial real estate purchases in Taipei and Taichung in the first quarter, the real estate proportion increased to 3.4%. The return of different investment assets are as follows: cash and short-term investment 0.17%, domestic fixed income 4.32%, domestic equity of 16.23%, secured loans 3.17%, policy loans 5.13%, real estate 1.48%, foreign deposit 0.11%, foreign fixed income 4.4%, foreign equity 1.94 billion, with the total ROI at 5%. Through the prudent asset allocation, the recurring yield remains stable.
In terms of hedging structure and cost, China Life has engaged in stable long-term hedging portfolio management. In Q1, hedging costs fell 0.08% thanks to FX gain from USD appreciation. FX reserve also increased to 6.74 billion. On slide 23, this is our EV assumption. Under the current trend of rate hikes, China Life revised the first year ROI of NTD and USD policies upwards. Long-term rate is expected to flatten. Risk discount rate remains at 9.5% after considering ROI and the overall assumption. Slide 24, we can look at investment yield assumption. For 2022, investment yield assumption for NTD policy is at 3.62%, rolling over 4 bips year on year. And for USD policies, the figure is 4.42%, rolling over 10 bips year on year. And the figure is 4.42. On slide 25 is non-economic assumption. For RBC, it's based on requirement by the regulator, shall not be lower than 200, and the cost of capital is calculated while considering the regulator's requirement on ICS. And this year's assumption is also verified and reviewed by EY. Slide number 26 is our EV year on year. Adjusted net worth increased 23%, and the growth of value in force increased 9.5%. CLC is because of the C3 interest rate risk. And if we look at the EV per share is 81.8. After conversion, EV per share for CDF is 26.9. Slide number 27, adjusted net worth. It is considering the shareholders' equity in 2021, appraisal gain from self-use property, FX reserve, and the deduction of unrealized loss of bonds. And the overall adjusted net worth is 177.5 billion. Slide 28. This is the VIF movement. Considering earning release due to time and data changes, assumption changes including economic assumption and short-term rates going up, long-term rates staying flat, and non-economic assumption, as well as VNB contribution of 222.7 billion. The figure is 281.3 billion. Slide number 29, VNB movement. In 2022, the significant changes in regulation included downward revisions of reserve rates and adjustment of production type products threshold premiums as a result of hot sale before China Life stopped selling such policies due to regulation. The figure reached 5.1 billion. Additionally, due to market demand, we have also increased the sales of ILP, with effective sales reaching 2.2 billion compared to the previous sales of traditional and single pay product. The VNB after COC in 2021 reached 21 billion, and this is the sensitivity analysis on slide 30. Every 0.25% in investment yield change will affect a value of in-force by 13%, and every 0.5% change in risk discount rate will affect value of in-force by 5%. For KGIB KGIB shows stable growth in multiple businesses, including corporate and retail finance and financial markets, with profits from core businesses continue to increase. Q1 net revenue grew 30% year-on-year. Net income reached 1.36 billion, up 25% year-on-year. NIM continued to increase on the back of loan mix adjustment. NIM further increased to 1.44 thanks to bad debt recovery from corporate finance in the first quarter. If excluding the one-off bad debt recovery, the figure is 1.39. In the midst of growing NIM, KGIB is devoted to maintaining asset quality, with the NPL ratio remaining at 0.14%, lower than the average. And the next slide, regarding loan mix, KGIB continued to optimize asset structure, focusing on SME and personal loan. And the growth mainly comes from personal loan growth by 18%. And regarding deposit mix, the CASA ratio increased to 41%, despite the deposit balance declined slightly in the end of the first quarter. The balance in April has already returned to the level of the last quarter. In terms of profitability for CDIB Capital, due to Russia and Ukraine conflict, rate hike by Fed, and the impact of Chinese lockdown on supply chain, the overall capital market has fluctuated widely since the first quarter, and the valuation of its investment position has been impacted. After considering these factors, the first quarter net income was a loss of 570 million, with ROE at negative 7.3%. In addition, although the ROI of self-owned investment position in the first quarter was negative 2.5%, if compared to the changes in major market index, its investment position was less impacted. The total equity at the end of the first quarter was 27.2 billion, a decline of 8.1 billion compared to the end of the fourth quarter, mainly due to the 8 billion cash dividend upstream to CDF. Slide number 26. In terms of asset management, the total figure is 47 billion, the same as the fourth quarter. Since April, fund commitment will increase by about 1.4 billion for regional composition of asset management, 49 in international market, 27 in Taiwan, 23 in China. And for related investment, prepare for new private credit and buyout funds are gradually reflected in the principal investment composition. And for investment in Taiwan, there is new investment appropriation in the first quarter, but due to impact of valuation fluctuation, the position is relatively reduced compared to the figure of last quarter. And if we look at the allocation, Taiwan is 27%, China 23%. And for KGIS profitability, the first quarter figure is 1.44 billion. It's a decline quarter-on-quarter and year-on-year. There are two main factors. First is because the transition of China Life has completed by the end of last year, so it will not recognize relevant investment gain. Second, because of the capital market, the income has declined. And in terms of income composition, domestic takes up 92.3%, overseas sub 7.7%. In the first quarter, the ROE is 8%, still better than the industry average. And as you can see at the lower part, the customer AUM is 358.6 billion and 11% increase year-on-year. The scale of Taiwan's wealth management and KGI side both increased over the same period last year. And for slide number 39, revenue, the figure for the first quarter is 3.4 billion, down 37% YOY. And the mixed brokerage accounts for the highest proportion, 68%, and the net investment income is affected by market fluctuation. These are the performance of our 4 subsidiaries. Thank you, Mandy. Before Q&A, I would like to invite the president of China Life to talk about the issues all of us care about. So let's welcome Stephanie. Thank you, Richard. Good afternoon. I am Stephanie Huang. So I will talk about China Life from 5 perspectives. First, in terms of investment and assets. For the second half of the year, we're cautiously optimistic. The rate hike is more certain, and inflation moving forward because of base effect, it will be less severe. We still need to monitor how it will impact economies, and also the Russian-Ukraine war, its uncertainty still remains. The overall financial market will still be affected and remain volatile because of these factors. High rates and lower stock price will offer opportunities for us. China Life will continue to invest in USD bonds. From the end of last year, the percentage has increased from 3.7 to 4.5. This is beneficial for our recurring yields. In terms of equity, according to Bloomberg, the overall Taiwanese profit is around 8%, focusing on the tech sector at 13%. And the PE ratio is 11 times. This is the lowest in recent years. The low valuation shows a long-term investment value. China Life team, we will look for opportunity to adjust our investment portfolio to look at high yield equity to maintain our profit momentum. Second, I want to look at it from liabilities perspective. Our COL, 2.98%. We are the only big life insurer lower than 3%. Because of rate hike, the COL by the end of this year will remain flat or increase slightly. It won't be severely impacted. Overall speaking, due to rate hike, the investment spread will also widen. Number 3, I want to talk about net worth. Due to rate hike, for our bond position in terms of valuation, it's not as positive, therefore our net worth decreased. However, all of you online know that this is because of the current accounting system. Asset and liability valuation is not consistent. If we are in line with IFRS 17, China Life's net worth will increase 75 billion. So in terms of rate hike, it actually has a positive impact on our net worth. The vice director of IB also made similar announcements and feedback. And in terms of business, number 4, we focus on regular pay and high value product. In 2021, traditional regular pay product, our FYP, is 23 billion, YOY 3.4%. We are the only big company with a positive growth in terms of regular pay YOY. And our FYP decreased. However, the decrease is lower compared to our competitor. Excluding the regulatory factors, China Life focus on high value product to optimize our product mix, and this bring in 5.7 billion worth of our value, and the FYP decreased in the market due to many factors, and we also decreased 14%. However, because we focus on high value product, because of this strategy, our VNB increased 5.5%, and this 5.5% increase comes from quality and quantity. For quantity, China Life, our 6 pay products, the premium increased 1 time, doubled, and our market share increased from 6% to 11% to number 3 in the industry.
In terms of the volume, the VNB margin of traditional products increased from 23% from last year to the first quarter's 36% in the first quarter. Number 5, I would like to talk about channels. Our channel strategy are diversified. We're dedicated to expand our own channels. Since 2018, we initiated transformation. In 2019 to 2021, the insurance industry and the agency registration decreased, but we are glad to share with you during the period our agency registration increased to 13%. Next, the biggest channel of China Life is bancassurance. It's accounted 60% of our FYP. And last year, for the bancassurance channel, we promoted the high value products. And in 2021, the FY high value products revenue doubled compared with the same period last year, and the market share was 26%, ranked number 1 in the market. And we also maintained the number 1 position on the first quarter this year. In the future, we will continue to focus on the high value product promotions and to drive VNB margin of China Life. Lastly, we wish Taiwan's COVID situation can come to an end. Everyone stay safe and stay healthy, and we can go back to the normal life. Thank you. Thank you, Stephanie Huang. Next, we'll move to the QA session. First of all, we will invite the corporate investors and analysts to raise questions. Please click raise your hand symbol in WebEx, and we'll invite you to speak one by one. You can go to the detailed instruction on the WebEx official website. First of all, we'll invite Chong from Credit Suisse. Thank you, Mandy. Thank you, the presentation from the management. I have a few questions. First, the board approved a capital increase plan. Is it a general mandate, or you have a specific plan? Either way, can you give us more on the thinking behind the capital increase? And the second question is about China Life. Can you give us the 2021 single rate of EV? I've seen the VIF year over year. The return of China Life is more conservative compared with the insurance peers. The other insurance companies increased their return assumptions, but China Life's are more conservative or even adjusted down of the figure. I would like to know the reason. Can you give us the split of NDF and currency swap. The pre-hedge recurring yield of China Life, is it possible to adjust it up, or you will maintain it? Next is for KGIB, the spread is down 1 BP QOQ, but the net margin up to 6%, up to 6 BP, and there's a huge gap. Can you explain the reason why? Thank you, Credit Suisse. I will answer your second question about the EV single rate. And this year the figure is 4.22%. Sorry, we encountered some technical issues of our microphone. And we will restart, and we will invite Steve to answer the first question about the capital increase.
Okay, thank you. Apologies to everyone for the technical issue. I think when we activated the Q&A session to see everyone, it created an echo. So the answer to the question is twofold. First of all, as you're aware, we obtained approval from the board to issue up to 2.5 billion shares that, based on the closing price at the end of May, would be 40 billion NT. The reason for this is twofold. The first is we want to make sure that we retain a proactive and sound financial structure for our company, particularly because of the potential and the market volatility we've seen. And second is because we believe there'll be some M&A and strategic investment opportunities available to us. We've identified a few, and we want to make sure that when the right time comes, we are prepared to do the offering. We haven't yet finalized the timing or the amount, but the approval that we have will be in place for the next 12 months. And as soon as that decision is made, we will get it ratified by the board, and we will inform the market at that time. I will now get China Life to answer the second question.
Thank you. Hi, Chang. I'm Zhihong from China Life. About the EV single rate. And this year is 4.22%. Compared with last year, the year one rolling to 4.27 dropped 5 BPs. And last year, the average is 4.19, and this year increased to 3 BP. And we decided the figure from a long-term stability perspective. Hi, Chong. I'm the Chief Investment Officer of China Life. I'm Lauren. From the return of investment, when we increase the figure, when we're considering this year's figure, we considering the rate hike, and we consider the overall financial market. During the economic growth, there will be some headwinds, and the new Taiwanese dollar, we consider the hedge cost of new Taiwanese dollar, and we adjusted the hedging cost. For the long end, our return assumption is slightly dropped compared with last year, but actually the change is not much, and the assumption is stable. And the next question is about our hedging cost. The DF and NDF, what are the figure? At the end of first quarter, our overall hedging cost is 0.08%. For DF, the cost is 0.25, reflecting the spread between dollar and NT, New Taiwanese dollar. And the NDF cost is relatively higher, it's 2.25.
For recurring yield, due to rate hike, it's expected to increase, but it relies on new money investment. Just like what the president said, overall speaking, due to positive spread, we are able to increase the figure. For KGIB, I would like to invite Jenny to answer the question. Hi, Chang. For KGIB, the spread 1.37%. This is a good figure, and compared to last quarter, it slightly decreased because it has not fully reflected the impact of rate hike, and NIM has increased because KGIB has disposed bad financial instrument. That's why we have this figure. Now I would like to invite the next question. Second, let's welcome Jamie Huang from JP Morgan. I have a few questions I want to ask. First, regarding China Life. If we look at investment yield, year on year has increased. So I want to know the 5%, does it include the 1.5 ECL for Russian bonds? If yes, China Life this first quarter, the decline of profit, is it because of the FYP? Because since investment yield has increased. And second question, for EV, on slide 28, VIF, 2.6 billion, the changes, what's the breakdown? Including because the investment yield lower 5 basis points, so I want to know the detailed breakdown. And also, is there other assumption changes causing this 22.6 billion? And for VNB, the changes in ROI, is it the same as a VIF? Is it negative, or does it have a positive impact? And the last question for KGIB, this year, for the rate hike in Taiwan and US, what's the figure for NIM by the year end? Is there any target? Thank you. Thank you, JP Morgan, for your question. So I would like to invite China Life to answer the first part of the question, and then Jenny will answer KGIB's question on KGIB's behalf. Hi, I am Lauren. For the 5%, it included the ECL of Russian bonds. And for the overall profit, is it because of assets? I will invite Jay to answer the question, our actuary head. Hi, Jamie. I am Jay. For our cost of liability remained at 2.98%. Through performance growth, our cost, because our portfolio has increased, therefore the figure also increased. For the trend, we focus on protection type product. That's why the figure increased slightly. So that's the reason. And for the second question, for the VIF, the 2.6 billion change, because our ROI compared to last year, it increased, but rolling over, there is a downward adjustment. The economic assumption, overall speaking, it affects 3.3 billion, and also mortality, the effective figure is around 600 to 700 million. And for VNB, the overall ROI year one has increased compared to last year, so it has a positive impact. So there are some changes in our assumption. Thank you. Now I would like to invite Jenny. For KGIB, if we look at our asset and liability structure, the increase of 0.25%, it will increase 4.8 bips. And for US, if rates increase 0.25%, then it will increase the figure by 0.6%. So there are different perspectives in the market, but for us, we won't have a fixed house view. We will adjust our view dynamically in response to rate hikes. The NIM this year will be above 1.4%, and that shouldn't be a problem. Okay, thank you, Jenny. Now let's move to the next question. Please raise your hand, then we will select you and answer your question. Next, let's welcome Tina from President. Tina, you may now speak. I want to ask China Life, the first quarter OCI is a loss of 15 billion. I want to know the proportion and the breakdown, how much is equity, how much is bond. And I want to ask about Jianxin Life. Thank you, Tina, for your question. I would like to invite China Life to answer your question. Hi, Tina. I am CFO Herbert from China Life. For the bond equity ratio, the 15 billion USD bond takes up over 80%. Others are equity. And for the CCB Life, their performance in China, the factors affecting them are pretty similar to that of ours. The rates and also the stock performance in China is also quite difficult. The impact is also negative. The figure is not very big. Tina, I am Jay from China Life. Regarding CCB Life's listed question, from what we've known, they are currently studying it with consultants, and there is a plan. Originally, they will be listed in Hong Kong's H share. However, in China, if it's within the same group, it should be listed as A share. But this is for non-financial company, not for financial companies. So they are currently observing and to see, and this is all in progress. And for CCB Life, they continue to improve the value of their products. Their VNB in 2021 is around 0.8 billion, and the figure previous year is 0.6 billion. So it has increased a lot. They want to continue to focus on high value product and to increase their net worth. So this is my supplement. Thank you. Thank you, Tina. Next, I would like to invite Claire Zhang from Sinopec. Because of this market performance, it will have a huge impact on China Life. Have we calculated if the bond market, equity market falls to what level? How will it affect the cash dividend and affect the cash dividend payout of CDF? Thank you, Claire, for your question. Who should take this question? Let me see. Steve will answer the first part.
Yeah, thanks for your question. Obviously, as you know, market volatility has been pretty wide-ranging. We currently purchase data both domestically and overseas that allows us to every month update all our scenarios, run sensitivity analysis so that we understand the potential impact not only for the balance of this year but next year. We've also made adjustments to our book, particularly in China Life, beginning late last year, to mitigate the impact of further rate increases. Obviously, we're not in a position to disclose the actual amount because it depends on what the market does, and these scenarios get updated every month. But we're very comfortable that the team has done a good job managing the current scenario. They've anticipated different scenarios, both good and bad. And as more information becomes available, they will adjust the books accordingly.
Thank you, Claire, for your question. If there is any question, please raise your hand.
Since there's no more questions, I just want to briefly thank everyone for dialing in today. As I think you saw, we've managed to perform well in the first quarter. Obviously, April has been quite challenging for the whole industry, and I think we'll see some impact as well. But we remain cautiously optimistic about the second half. We have a very good team, a very clear strategy, and we'll continue to execute as the year goes on, irrespective of the challenges in the environment that we face. So thank you very much for dialing in, and thank you for your support.
After the 3-minute break, we will take questions from the media. Thank you for your patience. Thank you all for your participation in the Q1 investor conference call. For more information, please visit our website. Videos and audio recordings will be uploaded to our website afterwards. Thank you.
First, we'll invite Wan Chenhua from Bloomberg to ask questions. Sorry, Chenhua, we cannot hear you. Okay, we will invite Chenhua later. Now, we invite the Shu Xin. Your CEO mentioned about the capital increase, about your potential M&A targets. Do you have any criteria or priorities of the M&A plans? For example, maybe in certain subsidiaries or which businesses? Is it in overseas? Maybe your focus on overseas instead of domestic in Taiwan. And the second question, can the subsidiaries share about dividend? Because a lot of the listed companies' dividend this year created a new high. You can share the share income this year. And China Life, the revenue broke the record last year. And of course this year, due to the market performance, can you maintain the growth momentum this year? Thank you, Shu Xin. And the first question, we'll invite Steve to answer. And the rest questions, we'll invite our CFO, Jenny, to answer.
Yeah, so thank you for your question. In terms of opportunities for M&A, we believe they must fit a few criteria. The first is that we are looking for opportunities where we believe we can achieve a double-digit ROE within the first 3 to 4 years, because we want these opportunities to be accretive. In terms of, and obviously we will be very disciplined when we analyze these opportunities. In terms of geography, we believe Southeast Asia is very interesting, but there could also be opportunities even domestically. So we evaluate opportunities in both. They could involve opportunities in terms of investments, i.e. ideally more than 20% so that we can equity account. They could also be acquisitions, or they could be in the fintech sector. So we have quite a wide lens that we're looking at. And ideally, we can find opportunities that more than one subsidiary can participate or benefit. That'll also make more sense from a synergy and future growth upside. So those are the comments I can share with you regarding our M&A approach and strategy.
Okay, next question, Jenny. As for the dividend income, this year the volatility in the stock market can be seen, and we need to look at the capital gain and capital loss. The adjustment between the gain and loss, the adjustment should be made based on market performances. The relevant dividend forecast is difficult to make. That's my answer. And next, we will invite Chen Hua from Bloomberg again. Can you hear me? Yes, please. Okay. Because one question is asked about the interest rate expectation from US and Taiwan. but you didn't answer about the level of rate hike. What is your current forecast? Next, I also want to ask about the cash position dropped in first quarter. What is your expectation for the bond market? And your question, I will invite China Life to answer first. Good evening, I'm Lauren from China Life. About the rate hike expectations, in the US, we believe there's 6 to 8 basic points increase, and while in Taiwan there will be less space for the rate hike, and the impact to our ROI it will be greater. And previously we mentioned the ROI will be 4.51%. About the recurring yield, we can increase 5 to 10 BPs, but it also depends on the market performance. In China Life, our asset distribution, due to the foreign asset return are higher and they are diversified target, we will try to increase our holding of the foreign bonds, and it can increase our recurring yield, and that is our strategy. Thank you, Chen-Hua. If there are other press like to ask questions, please raise your hand. And Jen Ling from the Commercial Times. And Jen Ling, please unmute. We look at the China Life's cash utilization table, and the Taiwanese stock market encountered 8.7%. And Stephanie mentioned about we will do more on the mid and long-term investment on the stock market. Are there any space for you to increase the investment in the equity market? Thanks for your question. We will invite Lauren to answer. As for our stock market utilization, we are quite flexible. In the first quarter market share, there are two factors impacted the figure. We still have cash to invest. We will increase the Taiwanese market investment in a good time, and the volatility in the past is huge, and we also decrease some of the positions, and we will reinvest in a good timing. And thank you. Thank you for your questions. And that's all for today's investors conference. You can find the recordings and download PowerPoint files in our investors area in our website. If you have further questions, you can email us. And thank you all for joining today's investors conference.